What's going on, everybody? Hope you guys are doing well. Just doing the normal backtesting / Q&A session this morning. So if you got any questions, you got anything you want to cover from past week, we'll go over that. Otherwise, got a couple things I want to talk about. Mostly just covering the setups from this week because I know it's a little bit difficult with FOMC, some PM session stuff, and then as well as some psychology reminders that I've been using the past week. So if you got anything, you put them in the chat. Otherwise, we'll go straight to Tuesday. We'll go to Monday here. Definitely a more difficult week with the news. There wasn't really anything super clean besides maybe on Thursday-ish. But I also wanted to go back and cover the macros. Now, something I wanted to say was when we're looking between 9:45 and 10 o'clock, if you think about your profiles. If we have 8:30 news, they're going to be looking between really the first 30 minutes to create that swing high or swing low for bearish or bullish. And then between 9:30 and 10, create the swing high or swing low with news. And then on a normal day, between 9:30 and 10, we see that first U to swing. And then 10:30 to 11, we create another time-based high. Now, what you can do with that is between around 9:45 and 10 o'clock, really between, I would say around 9:45 and 10. On the 5-minute chart, you're going to see a swing point form most times, and you can use that with your macro. So we'll go over the past examples from the past week, but here you have a swing low being formed around 10 o'clock. This is also why you want to wait, preferably for the first 15 minutes to print if you're unsure about the draw on liquidity. If it's obvious, we're trading to a gap on the 15-minute time frame and we see a clear ATM setup, then sure. But just looking at your 5-minute chart or looking at the 1-minute chart, you can see a lot of these swing points do form within macro time. And obviously, if you're anticipating a reversal like this around 10, you can use that as your context as well as a higher time frame draw on liquidity to get in. Now with news, that swing point's going to form between 8:30 and 9 most times, but you can still shift everything back. Now, if price does reverse at 9:45, you can look for a low risk entry or a continuation entry using the macro time, or we can look for a reversal entry during the macro time around 10 o'clock. And if we go back to Tuesday, we can look at the same exact thing. Here we have a reversal around 9:45. Nice. Actually, this was a good setup here, but nice 9:30 volatility entry using the 9:30 open. 15-minute fair value gap, I'm sure. Trading into, let me see if I can pull it from the other chart. Was this Tuesday? Yeah, here is the, I don't know if it's going to print. Oh, it's not printing. Whatever. But 15-minute fair value gap trade into. We had a 5-minute candle closes in the other direction. You got your simple 2022 model. We retrace back into premium there, premium fair value gap, and sells off into the sell side here, which is a good 60 points or so. Now, as we complete that one model, you have another model that forms after. You have this 9:45 reversal, and then the macro is used as a continuation entry. You have another fair value up here, taps into an order block, and you can use that. Obviously, if you wanted to wait for a market structure shift or a dealing range discount, well, you have one market structure shift here, another one traces back into discount within that price leg during the short-term little tiny child dealing range there. Traces into discount, flies up back into premium of this current range, into a fair value gap with an order block here. You can go back and do the same thing on Wednesday. Now, Wednesday obviously will be low probability prior to FOMC, but still kind of stuff applies. We had a run above short-term high here. Takes it out, trades lower. And then right at around 9:45 to 10, we do put in this another swing low. So on low probability days, if you're looking at your MMXM profile cheat sheet, that list, it's the beta and theta little profiles. It doesn't matter if you don't know. But anyways, on the days we're expecting low probability, typically that's before 8:30 news or something like this, before FOMC. Then we could be using that as narrative for why the morning session will be poor. A lot of times on those poor days, you're going to see two Judah swings within the 10 a.m. hour. Not within the 10 a.m. hour, but within the first 30 minutes up to 10 a.m. So in this case, we have Judah swing here, takes out the old high, and the Judah swing finishing around 9:45, and then you can use it, same exact thing, the macro time here, using not even really any fair value gaps within this, but you do have a bullish order block held throughout the majority of the macro time, and then it shoots back up into premium of this dealing range. Now you can use this macro by itself just as your whole model, right? If you know exactly what you're looking for. And most times it's going to be three different types of the 950 macro that's high probability or that you'd like to trade. It's going to be your 945 reversal. Like you can basically summarize all of the macro cheat sheets, all the 950 macro, V5, whatever, into about three things. My 945 reversal, which will create a low risk buy, low risk sell. Put low risk sell there. You have your continuation entry. Typically when we have a 9:30 Judah swing, or if we have 8:30 news, sometimes we can reverse and use this macro as an entry point for the ATM model, or we see it really just consolidate. And you just use that framework. Okay, so starting at 950, what's the context? What are we likely to do? Have we met our objectives? Is there a reason for us to reverse? All that stuff's going through my head as to what this window should give us a trade for. Now, the trade doesn't have to finish within the macro time. A lot of times this is just an entry period, and sometimes it will complete the 20 points later or whatever your target is. But it's just good to look for an entry point. Now, when we're taking partials and we're looking for targets, things that I like to do is 20 points is the first one for me, no matter what. And then after that, you're looking at premium or discount of the range is most likely going to be second partial. So obviously if we're shorting up here in premium and we're looking for a 2022 model down into the target, I'm taking a partial off at 20 points. And then I'm pulling that higher time frame dealing range and figuring out where we want to go within that range, right? So this would be your dealing range. Any short-term low or imbalance found within discount would be a target. Now, a reason why you wouldn't be looking for this external range sell liquidity sometimes is if we are piercing external range on that Judah swing. If we have a higher time frame dealing range, or if we have a there's a lot of price action over here, right? And then it trades down and creates this run up, and then we have the rest of the price action. This sweep would be internal range liquidity, right? That would be your internal range, pierces that, trades back lower. So would we expect external range? Yeah, we would expect it to come all the way back down, maybe retrace back into a price like this, and then shoot back down into our external range. But since we don't have that kind of price action over here, instead it's just kind of piercing above external range, well, it's going to go from ERL to IRL. So you're going to be looking for internal range liquidity pools. In this case, we have relative equal lows during the London session, and it comes and takes that out. So when we're using the macros, or we're using really any trade model, you want to be using that kind of framework: internal range to external range, and external range to internal range. And that goes back to the profit taking. It's really going to be 20 points for me, 50%, and then full terminus or anything, any PD rate that I'm looking at on the higher time frame. Now, once you get really good at it, you can use time to exit. So if you have a higher time frame PD rate, 15-minute or the hourly PD raise, say it's a gap above market price. We're going long and discount, targeting that 15-minute imbalance above us. Obviously, you're going to be taking partials along the way, but if we reach up into there and we're bullish, we see our Judas swing at 9:30, maybe at 9:45, starts trading up, and we fall short of the gap and maybe 10:15. Now that high has been put on at a wrong time, right? That high is put in not between 10:30 and 11, which is where you'd want to see the rest of the morning session finish. So we can assume is if we're trading back into a for value gap, or if we're trading back into discount, that price leg that creates the retracement either into a higher time frame for value gap, could be a 15-minute, 5-minute, even a 1-minute gap. You drop down far enough, this retracement leg, and then trade back up into the higher time frame PD ray will give you a short-term market maker buy model. And you can use that as your trade setup as well. All those little retracements. I just like to use the 15-minute to the 1-minute. That's the easiest for me. 15-minute for value gap or 15-minute run on stops, and then going down to your 1-minute chart and looking for that market maker model. Obviously, we had a nice run up here with FOMC. We'll go to Thursday really quick. Here you have the same thing. Okay, you have a reversal, your standard 2022 model. Taking out, what is this, external range or internal range? Well, there's not a lot of price action coming from up here, where we look at this as internal range. So we're going from external range up here, and we take our current dealing range from high to low, and we look for pools of liquidity, relative equal lows preferably, or imbalances that form in discount here. So this is when you can anticipate, are we likely to reach all the way down into here? Is there a higher time frame bias, first of all? And what are we piercing right at 9:30 or right at 8:30, internal range or external range? And this is when you can find those really expanded, like expansive moves and just nice low resistance liquidity runs. High probability days are going to go from internal range all the way to external range. Sometimes we're on the ends of the range like this, or on Mondays, a lot of times if we're completing a market maker model from Friday, or if we're just chopping around, it's going to go from external range to internal range, and it's not going to be super clean like this. Here's an example where it goes from external, trades down, breaks market structure right here. I don't know if you can see that. Breaks market structure right there. Fair value gap within premium of that leg. We also have this bearish order block. Whoops. This bearish order block, as well as the breaker right here, which you can see price respecting quite well. Trades back lower, and then the macro time, in this case, creating another reversal point as you trade back into a BISI here and trading back into premium of this range. And you can see basically throughout the entire week, this is happening, where it's either at the bottom of the range or top of the range, and it's reversing, creating some sort of a short-term reversal, trading back up into premium, and then another leg lower, putting the low at 10:45, 10:40, and then right here at 11:07. So about 7 minutes outside the range, and then it traces back up. Nice market maker sell model here. And then into Friday. Very similar kind of thing. We did have a 15-minute imbalance over here. And whenever we're trading into a 15-minute imbalance right at 9:30, I'm just going to pull it from here. I don't know exactly where it is, but actually we just go to the 15-minute chart here. It's on Friday. There you go. Oh, that's pretty close. 15-minute imbalance right here. Go down to your 1 minute, right at 9:30. Pretty standard entry there. We've got a market structure shift already forming, as well as a breaker. And then we have a gap up here in premium of this leg. Stop loss would have to be above Sorry. The swing high that's formed. Now we do shoot down, and I was anticipating a run below here. If you go back and watch the stream, I was looking for a run below the 8 for 35 low because we would go from internal to external. Never got that within the morning session. I don't even think we got in the PM. Yeah, we didn't. But still gives within the range 20 points and down into discount. You got a fair value up there, order block, and a swing low. I think we just made a relative. Oh no, we pierced it. One tick there. And then during the macro time here, we put in a swing point at 9:45, start trading up. So are we expected to basically reverse at 10 o'clock? I would say no. Then you just find your fair value gap, and you want to be pairing it with either an order block or form of inversion order block. Well, in this case, we have this up closing candle here that was used one time as a bearish order block. So we have, if you want to pull this from the wick, now this is a low probability one, but we can still pull it in this case, just for example purposes. Taps into that, volume balance there too. So that's 1, 2, 3 PD arrays, runs in there, closes bullishly above the fair value gap. You have this gap too, and then shoots back up into premium, I believe, of this range. Yep. Up into there, taking out these relative equal highs. So this is also how you want to kind of go about backtesting and just reviewing the morning sessions. Take screenshots of your hourly, 15-minute, 5-minute, 1-minute, and then just go in and do this every single day. Mark out the stuff that you may have missed or the things you took losses on, because it's always more clear in backtesting and in hindsight, right? And that's how you refine your craft. If you're just coming to the charts at 9:30, taking a couple trades, either leaving or staying on for multiple hours, you're not actually reviewing your work. You're not going in and seeing what you did wrong or seeing your thought process that led you up to either taking poor trades or not following your rules. Then you can't expect to get better. Like with every sport, with every craft or job, you're always going to be reviewing the things, or you're going to be practicing the things that you, in honesty, suck at. So if you are terrible at risk management, if you're terrible at finding good trades, if you're terrible at maybe sticking to your model, every single time you fail to do that, you need to go back, either screenshot it or have a journal next to you where you're writing down everything and able to document it. And it ingrains it into your mind that, okay, this is something I should be doing or shouldn't be doing. And it should always be positive reinforcement. Don't ever write like, oh, I suck at this, or I shouldn't have done this, or I, beat yourself up over it. It's part of the game, but you're obviously gonna have to be your number one cheerleader in this case, and find out what works best for you. Sometimes it's either a macro, sometimes it's gonna be simple trades, but this is where backtesting really helps, because you can refine what you see every single day, appears in the charts, get in, get out, and be done. Oh, I didn't even see it. There's also an inversion for value gap right here too, we traded into. Then after that, pretty poor price action. Never completed the market maker sell model here. Ran short respect to the last down closing candle, which is a high resistance move like this. High resistance liquidity runs, most times will either, when we're trading down like this, we'll either take the stops or trade into the last order block in a consecutive order block range. So if we're looking at like something like this entire range would be your order block, right? Technically that would be your breaker. So as soon as we close below it, you want to see something like this, trades up at the bearish end of the breaker and shoots down, right? This case, we're basically retracing all the way into the last portion of these order blocks, all the way up, all the way back down, and then all the way back up. And it's not very fun to be in. You want to see respect. It's like disrespecting these fair value gaps and then coming back down. Disrespecting fair value gaps, trading all the way back into premium, coming all the way back down, trading all the way back up. And it's when you are used to low resistance liquidity runs, these are going to be very frustrating, and sometimes they're going to stop you out and you're going to blow up your account just based on these price runs alone. So for me, it's when I'm streaming or when I'm looking at the charts by myself, if I have to flip bias more than 2 times in a session, in my head, that's already going off as low probability. So if you have a bias, as soon as you come to the chart, maybe you spend 20 minutes looking at the charts, hourly, 15, whatever you use for a higher time frame. And you know, okay, this is what I'm anticipating. I want it to run into this gap on the 15-minute chart and create a 1-minute market maker sell model within the kill zone time. And it doesn't do that, starts going the other way. Obviously, there's nothing wrong with flipping bias, but you still have to work from a top-down perspective. So if you flip bias, don't just look at the 1-minute chart and start flipping bias, because that's going to give you a false sense of security and just trusting the 1-minute PD raise. Go to your 15-minute, go to your 5-minute, and make sure that we're actually showing signs of a reversal or if we're changing the state of delivery, not on the 1-minute. It's going to be much more difficult to look in the 1-minute on a grand scale of things. So if your 15-minute and 5-minute agree, or maybe you flip your 1-hour bias and you flip bias there, if you have to flip it again and prices, either going back and forth, search and destroy kind of stuff, it's not going to be high probability is what I've seen. Because most times when you get comfortable with price, you know exactly where it's going to go or likely to draw to, and you know what PD raise should hold and which ones we'd like to see trade through. And if you keep going back and forth, or bullish, then bearish, then bullish again, it should already show you either you're too eager to get in a trade, or you don't know what you're looking for, or it's low probability. And all those situations you can either avoid or they can be mitigated either by rules or just lowering position size. We went to lunch, consolidated there, and then a nice market maker sell model from external range. In this case, it was internal. Internal range up here. Internal range, since you have this large trade lower. So I would actually like to see Monday complete the market maker sell model here and reach down to this juicy sell side liquidity, extend that out. Pretty even lows. And see all the candle bodies for the most part trading within this range. Never was it pierced with a full candle body into this fair value gap. So we have this large imbalance, probably pull this over, as well as the sell side. So tomorrow, if we gap down, I wouldn't be surprised. Or if we complete this going into Monday. Wonder how the conflict in Russia will affect the market. Yeah, I'm not sure. If you live in Russia, my condolences out to you. I hope everyone's doing well over there, but that stuff sucks, man. It'll probably just bring a lot more volatility, I guess. I don't know what news we have next week. I can look this up really quickly. We've got 10 a.m. news on Tuesday, 8:30 news on Thursday, 8:30 news on Friday. So we'll see. Monday's probably going to be low probability. Only really thing I'd be trading is if London session does create a run up above these highs, and we displace down into the sell side here. CE of the daily BISI. Take a look. Yeah, I like that too. Plus, you got to think, all right, seasonal tendencies are going to be coming in soon. It's not a guarantee, but if we do start trading lower, we'd like to see last week of, I believe it's last week of April into first week of May, right around here, I'll say. You want to see a low put in. It's not guaranteed, obviously, but look for, now the way you can look for this, you want to be using your 60, 40, 20 IPTA data ranges. So go back, look at your look back, draw your sell side liquidity pools. And then as we start to take those out around this time, then you want to look for SMT divergence. So if we see ES failing to make the lower low or YM failing to make the lower low, then you could look for that to be the shift, and we could continue back up for the rest of the year, maybe into the summer months. But I mean, going for all-time highs again here on Thursday was not expected from me. I wanted to see us continue down into the sell side pools. but I guess you take what you're given. You can also use DXY for that too. If you're looking at DXY and you look at the low put in, oh, we got the majority of that market maker sell model. Let's delete this. You want to see a high put in on DXY, right? So we got swing high here and a lot of liquidity over here too. So if we want to reach all the way up to this, would be nice. Weekly market maker buy model was nice, but not too many setups this week. Yeah, I agree. I wanted to see, here, I'll send you a picture of what I wanted to see on last Saturday, my bias for the week. Here's my bias for the week. So I guess we got some of it. If you go back to the hourly chart on NQ, wanted to see that market maker sell model form into this swing low. We got half of it by Wednesday or by Tuesday in the morning session, and then it just reversed on me. But yeah, it was a nice market maker buy model there. And the breaker in here didn't get respected. I think if we traded up and then held this breaker, I would have been watching a little bit more. But we traded all the way back into discount. So, I mean, yeah, weekly outlook. I've already started to disrespect this. Bullish order block range in here. Down closing candle, shoots through with displacement. So, this here would be your breaker. We also have already traded back into premium with this civvy here. So, I mean, you could look for discount of the range, which, yeah, would be 50% of that daily imbalance, or right around this gap here. Take a look at ES as well. Yeah, ES is holding that too. Are we currently bullish? Dow is messing with my bias. I'm bearish for the next month or so. Maybe it's a little bit too early to be bearish, but like I said, with the seasonal tendency and the fact that we're at all-time highs and we're piercing it multiple different times, at least on NASDAQ, and we're just staying up here in premium for so long, building up all the sell side, it makes me think that we want to see at least some downside price action. Because remember, every single time we sweep an old high, we're in premium. And obviously with all-time highs, we're definitely a little bit too far in. Yeah, if you want to start measuring standard deviations there, I like that picture. You can even pull it from here too. Right around 2 to 2.5 there. Right in that range of the gap. And if you're looking at the price leg, or if you're looking at just stages of price delivery, we do have an internal range liquidity sweep here. So you could be looking at that as your first stage of distribution in a market maker sell model. Because a lot of times if we're trading up like this, this is kind of the structure of your market maker sell model. We've got low risk entry, trades lower, and we have a sweep of stops during first stage, and then second stage, which is your silver bullet, comes in, fills a gap, a higher time frame, probably taps into a old level of distribution in here, or accumulation, I mean, and then distributes down to the sell side. So another reason why we should see this low taken going into next week. And it could be a standard, what do we have actually? I said Thursday news, right? Thursday news. So it could be Thursday low, weaker, consolidates in this gap, and then Thursday puts in low or high. Yep, I agree, Rob. Low risk on the top of the breaker, first stage with run above the old highs. I just want to see it run lower, create a gap, trades into the gap on Monday or Tuesday, and back into discount. We have all this sell side down here too, prior to FOMC. And the fact that we didn't take that liquidity pool at 2 o'clock, we didn't spike down and sweep that and then start trading up, that is bearish to me. That looks to me like we're engineering liquidity here in the 1 hour time frame. All of this could be used as your original consolidation. Original consolidation, really expansion up here. So this could see high resistance down into this range, potentially. But first stage, second stage, smart money reversal, first stage, low risk, first stage, and then second stage into next week. I'll actually screenshot this and send it to Daily Bias, just kind of an outlook. Every stage of the MMXM is SMT. So I wonder if this leg up here, we do have some SMT there. Yep. So look at this as SMT here within the first stage between ES and NQ there. So I do like it being bearish. I feel like poor risk management comes from greed. I think it comes from different things. Greed and fear and impulsiveness, for sure. But then most times there's an underlying cause. And it's going to be your biggest fear that manifests itself in your own trading. So for me, my biggest fear and something that I think about is, what if this stuff goes away? Like with everything happening in the world, what if the markets go away? And that fear sometimes can manifest in my own trading of, I'll take trades that either are outside of my model or are not enter in a specific way. I'll just mark it in just off momentum instead of using a true for value gap. And finding what your biggest fear is in trading, or what you either struggle with. Most times it comes from a fear though. That will, once you figure that out and wrestle with that and you're able to conquer that, you just grow super, super, super well. And if you focus more on the execution, if you got rules, if you got all this stuff written in place, and then as soon as you come to the charts, you're looking at that P&L and staring at it, maybe you put yourself in drawdown and then you increase your leverage to get out of the drawdown, or you're using 17 contracts when you should be using 1 to get 20 points. All that stuff stems from looking at the P&L over looking at the risk management. And would you rather have a streak throughout a week of following your rules every single day, and maybe you take 1 trade every single day, and maybe only 2 of them are profitable throughout that week, but at least on Saturday you can look at your chart, you can review and be happy that you stayed with your model and followed your rules because it kept you safe, instead of maybe you had 4 days of green and then on the 5th day you blew yourself up on Friday because it just kept on, you kept on getting lucky doing stupid things, and then it eventually just caught up to you, and maybe you made $7,000, but is it really worth it when you kind of cheat on yourself? And to be honest, not following your rules is just cheating on yourself. You're going to delay your growth. You're going to delay what's supposed to be coming to you, just because those things that are in place to keep you safe, when you can't keep yourself safe, and you're basically just throwing them out the window. And every single day matters, because a day can change a week into a month into a year, and a year can change your life, right? So every single time you think about pushing the button when you shouldn't be, or not following your rules, think about, am I going to be happy with this decision 2 hours from now? Or am I going to be following my rules, even when it doesn't feel like you should, or you don't want to follow your rules, you need to. And just like majority of the stuff in life, just because you want something doesn't mean you need it, or you need to do something. And when you're in the state of mind in trading, it's a lot of different emotions that are, these markets are programmed to basically use your emotions against you. They go the other way. It goes up before it goes down. It goes down before it goes up. It fills imbalances and then reverses. It's programmed to do things that are against the human nature. And that's why you have to have rules that are in place that are outside of your human nature, so you can look at those, and without any thought process, okay, I got to stick to those because I wrote those when I was in a sober state of mind, and those are the things that are going to protect me even when I can't protect myself. Yeah, I saw a lot of people trading FOMC as well. And even on Wednesday morning, like those days where it's low probability, and it's low probability, you can tape read it, sure, but trading those days, demo trading, of course, and trading low probability days in general is just a bad habit to get yourself in, because the market will always be here. There's always going to be a trade tomorrow. And there's always going to be if you're looking for 20 points, look how many opportunities are given to you for 20 points. Like, it's all over. All you have to do is find one of those, and that'll change your whole family tree. So one low probability day that beforehand should not determine your entire trading career. Do not, because those days are sometimes the hardest days, where you end up over leveraging, blowing yourself up, over trading. Just have the discipline to sit down and just be like, all right, I don't got to work today. Like, I don't, when you put it like that, I get a day off because it's low probability, I think it's a little bit easier to not trade. But, although I do agree it's fun, there's some days where it's more wise to not even pull up the charts and don't even look at it if you don't have the discipline. And sometimes that's better than just, tape reading it and seeing what happens. Trade FOMC is where the big boom is possible and account for any time distortion. Yeah. If you know exactly what you're looking for prior to, obviously don't trade something like this, like the 2 p.m. run up. After 2:30, maybe during the morning session, if you know exactly what you're looking for, and if you don't get it, don't flip bias. That'd be probably my suggestion. Because technically your model will still be there, it's just be a harder one. Like this macro time, if you use that, extremely difficult macro time, and probably would get shaken out just by waiting this long. Or even up here, like you don't really have an entry on this run on stops. It just kind of wilts and goes lower. No real entry. This is kind of too far in discount from me. Then it trades back up. And I guess you could shorten discount there, but it's just difficult. Just stay out of these kind of days. Mondays too. If you trade Mondays, there's nothing wrong with that, but you have to understand and go into it with an anticipation of, I'm here just to scalp, or I'm here just to find 1 or 2 setups and be done, because it's going to be way more difficult than it is the rest of the week. Either use low leverage or just take, the minimum amount of trades, or don't even take any trades at all. I would say if you want to focus on the highest probability days, it's going to be days where you have 8:30 news, or when you have no news that day and no news the next day. So if it's Tuesday and we don't have any news, and then Wednesday doesn't have any 8:30 news either, that Tuesday is going to be good to trade on. And then any 8:30 news days, you can look between really 8:30 and 11 o'clock, and there's going to be at least one high quality setup. And if you go back and watch the 2022 concepts or 2022 mentorship, You'll probably find a bunch of gems in there. And a lot of those examples he shows are days where it's likely to expand on the daily. And there's some sort of an economic calendar um, utilization within his framework of things. Because you look at the economic calendar, you know exactly what days those setups are going to form. And for me, I look at that. I look at, like, if I pull it up right now, let's go and let me check. So looking at the calendar for next week, I know that Tuesday my model will be there. I know that Thursday my model will be there, and Friday. And those are really the only 3 days I have to trade, because Tuesday has 10 a.m. news with no news the next day. Thursday has 8:30. Friday has 8:30. And you can be done like that. Obviously, I'm still going to be tape reading other days, but if there's anything extremely high probability that I wasn't expecting, I may scalp it low leverage, low position size, 20 points. But that's it. Otherwise, if I miss it, or if it's not something that I'm anticipating from a higher time frame, I don't really care. And you kind of have to get into this mindset of, if there's no trade, it doesn't matter. If you skip a day, it doesn't matter, because the market will always be there, and there's always going to be another setup that you can go in. And as long as you stay in the mentality of, I'm here to execute, I'm here to follow my rules, I'm not here to make money. I mean, in reality, you will make money, but your job as a trader is to manage risk. Your job, and you, to be honest, you get fired if you don't manage risk. If you overtrade, over leverage, you're going to get fired. You're not going to have a job. You need to come to this with the mentality of, I'm here to follow my rules. Even when I don't want to, I need to follow my rules and execute based on the setups that are presenting themselves. And if I don't get the setup, it doesn't matter. I show up the next day, right? What do you think about quarterly theory? And would you ever study it? I personally have spent maybe about an hour total looking at quarterly theory, my whole kind of backtesting stuff. I really don't have any affinity for it. I don't think I will ever study it, because it's not something that ICT has deliberately spoke about. Although if it works, I have nothing against people who use it. I just don't think, me personally, it's not something I'm going to study, because time is something that's very, very important. And the things that I've discovered about time using, economic calendar, the things that are available to you publicly, is really all you need. The complication of time and finding little pockets and windows and things, I think, pulls you away from the actual thing you should be studying, which is price action in relation to obvious points in time, right? Kill zone starts, 9:30, 10 o'clock, specific windows that are supposed to do things based on how the markets actually function, right? At 8:30, there's a news embargo lift. So there's a lot of volatility where it's not going to seek liquidity. At 10:30, London close is going to be the close of a specific session. So there's most times going to be a run on stops or a trade setup that's formed around there. So splitting it up into tiny little micro kill zones with, 17 minutes in between, I don't really know if that's legit. And, ICT really hasn't said anything much about it. So I won't actually study it. I'm sure you can find a lot of people who will, but like I said, if you use it and you find success out of it, who am I to say anything? Good stuff. Right, open, high, low, close, time, time frames, 15 minutes to 1 minute, and just using standard kill zone stuff. You don't really need anything else than that. And to be honest, if you are using quarterly theory as a crutch to find a setup because there's going to be a setup every little tiny window, you're not patient. You should be patient enough to know, okay, between this window and this window of time, there's going to be a setup. And if I can't see it, it's not there, right? If it's not obvious, then who cares? So don't use it as a crutch. The same thing with macros. Just because there's a macro time every hour doesn't mean there's going to be a high probability setup every hour in that too, right? Like, I'm not looking at every single macro. I'm not looking at the rest of the macros throughout the day. I'm really only looking at maybe one or two, but that's pairing it with the full framework that I'm given throughout the morning. So you also don't pay attention to intermediate term highs and lows and long term highs and lows. I do. It's mostly on the 15-minute and hourly chart. I use market structure and order flow to find a narrative, and those are really the only two things I use. So I'm looking at order blocks for value gaps, recent highs and lows that are broken or need to be taken, and then market structure, and that's it. And then maybe adding in market maker sell model or buy model into that. So when I come to the chart every morning, I'm looking at, okay, what order blocks and fair value gaps are we holding? Have we taken in liquidity? Do we need to take liquidity? And what's the market structure showing? So like in this, we have a high up here with a short-term high to the left of it and a short-term high to the right of it. That would also make this a long-term high since we're reacting off a higher time frame level there. Now these short-term highs will pierced up here, tapping into a fair value gap. So I'm anticipating this to be a intermediate term high. If we form another short-term high to the right of it, this would be an intermediate term high, and we would not like to see that broken so long that we're continuing the market maker sell model. If we do break above that, then you look for this high to be taken. And that's, I mean, obviously you can just be pairing that with order blocks too. So are we holding the bearish order blocks? Well, we have a bearish order block range in here. I haven't even retraced back up into it. And as we continue to trade lower, you'd like to see this up closing candle range in here be used as a bearish order block too. Microcycles aren't really nice, but daily and weekly quarters are honestly good. Yeah, that I feel like that if you were to use something higher time frame, that's probably worth it. Because that actually makes sense to me. Of like, yeah, there's quarterly shifts, weekly shifts, daily stuff like that. That makes sense. But relying, it's just like anything else though, to be honest. Relying strictly on quarterly theory, which I see some people do, is they, they only trade within this tiny thing, which if it works, that's fine. But don't rely strictly on one concept, especially when it's not ICT made. Like you're not going to strictly look at for value gaps. You're not going to strictly look at SMT. You got to use it all working together. So if it works, and they're all paired together, mesh well, then that's great. I think macros are so useful because that's when the hourly candle opens. Right. Yeah. If you're looking at hourly candle, when you anticipate the open, high, low, close, or even simple power of 3, then you can find these kind of setups in here where it's either creating a judo swing before or opening, creating that low, expanding up. And it's also finishing out. It's finishing basically 2 hourly candles. It's finishing one and starting the other. So if we have an open, high, low, close, this close run up here is going to be the last 10 minutes. Then open, low, high, close, something like that. You can pair this up to the 4 different ways, but just study those and it's probably going to be super helpful. Actually, I'll draw them out if you want, but open, open, high, low, close. And it could be, and you can obviously just pair these up. It could be this, it could be this, it could be this, or it could be that. No, I don't know. You figure it out. Level, everyone can have a different view of the market, but still use ICT concepts. Yeah, right. That's all it is. It's as long as you find something that works for you and it repeats, you don't really care about anything else because you know that your model and the stuff that you use is going to repeat. And I feel like that's a lot of what ICT is giving you. He gives you a whole arsenal of stuff, and you got to pick a couple weapons that you can carry and work, and you just continue to use that every single day. Right. Yeah, I use more order blocks than fair value gaps. Exactly. So you're going to pick whatever concept you like and sticks to you and hammer that in. I agree, Rob. Yeah, the 2 things that are really non-negotiable are going to be your higher time frame draw on liquidity and time. Those are the 2 things that, time and price. Anything in between that, PD arrays, the way you get in, stuff you're looking for, all can vary between people. But you need to have a draw on liquidity, and it needs to be paired up with time. It needs to be both on the x-axis and y-axis. Yeah, I agree. And to be honest, asking someone else for uh their opinion on what works best for them is impractical in the way of it's probably not going to work for you. Like my own, although I say all this stuff about the ATM model, about the macros, the way I look at it is never going to be the way that you look at it. So the things that I use personally are never going to be the things that you use or look for. Because my brain is going to be different from yours and vice versa. So that's why backtesting is so important. You can't rely on other people to do the work for you because it's never going to replace how your brain is making connections between things and informing those patterns and forming habits that you want to see repeat. Will be posted on YouTube channel? Yeah, I will. It should be recording. Let me check. Yeah, I'll post it later today. Yeah, no problem. Yeah, you should be asking questions and you should be doing the research yourself. Like watching other people do it, asking questions yourself is half of it. But then once you figure out if it's legit or not, you should be able to go and find it yourself too. That also just comes down to the mentality and the psychology of the trader. So if you're not willing to look up stuff that you think is important, I don't think you're going to ever find success in this. Right. Yeah, exactly. Everyone's going to be different. That's why it's important. All right. So I think we'll wrap it up there. Solid stuff. If you got any questions, you can shoot me a DM, or if I missed anything, if you want to back to some data, just like I said. But you should go and study it yourself. But if you want any extra data, then shoot me a DM. I'll be more than happy to share it with you. Live stream recording will be posted later today. If I don't see you guys on Monday or Tuesday, have a safe weekend and the rest of your week. I'll catch you guys hopefully next Saturday, Lord willing, for another backtesting stream. If you're in tier 2, I'll see you guys sometime next week too. So stay safe, enjoy your weekend, and I will see you guys soon. Peace.